Hello. We are in the month of February where the interim budget has just come out. This is me, Deep Ugani, here to raise some important aspects of budget 2024. Before speaking on the budget, I would like to speak on the types of budget. There are basically three types of budget: balanced budget, surplus budget, and deficit budget. Balanced budget is basically where your income is equal to your expenses. This would mean the economy is a little stagnant. There are no progress in the part of economy. The GDP may also be stagnant in this case. Surplus budget, where this is a developed economy where your income is more than your expenses, meaning your taxes are more, your expenses on public welfare are less, because this is mostly taken care by the capitalists. This is now coming to the deficit budget. In this area, this is mostly the case for developing economies where government need to spend a lot on public welfare, need to spend a little on creating demand, need to spend on creating jobs, where the country will keep on spending on its public welfare areas, on its people, to bring about a progress in the economy. So in this case, the government need to borrow from various financial institutions like RBI, like World Bank, like other countries, etc., etc. Important terminologies. GDP is what? It is a product value of all the finished goods and services made within the country during a specific period. What is fiscal deficit? When the government spends more than its total income, meaning the deficit budget that we were speaking on the previous slide. Such a situation is called a fiscal deficit. It is calculated by subtracting a total income from its expenditure. So we all have heard that the finance minister speaks about the fiscal deficit has been revised to a 5.8% of the GDP. Financial Minister Nirmala Sitharaman said. Why is that the case? What I'm trying to ask you guys is, why is the case that fiscal deficit is always measured in terms of GDP? Why is this the comparison? The main reason it is scaled in terms of GDP is to measure its impact of expenditure on the growth, meaning every penny spent by the government on public welfare is bringing a rise in the GDP. Taking this a step ahead, every penny spent on education, every penny spent on infrastructure should bring about an increase in the GDP. So meaning a percentage signifying the impact of government spending gives a clear picture of how the government is contributing to the increase in the GDP. So every time a penny is spent, say on roads, every time a penny is spent, say on investment in startups, giving benefits to startups. So this should in turn lead to an increase in GDP. If not, the government needs to again revise its policies and come back with a better program. So now, coming to the main important impact this will create on all the industries here in today's world is there's a very good incentive given by the government to the micro and small enterprises. So what the government wants to do here is that to improve the cash flows of the micro and small enterprises. Who are micro and small enterprises? We'll come to that also. So why is this very important? We have heard a lot of cases in India that at the micro level there's a lot of competition, at the small enterprises there's a lot of competition. So just because these organizations wants to do a good business, they keep on giving a good amount of credit. They have to again and again call their customers for recovery, and there are a lot of cases of bad debts coming up every year. So to curb this, so to reduce this, what the government intends to do is they intend to disallow such purchases or expenses of the organizations who have purchased from such micro and small enterprises. Meaning, if today any listed company with a turnover of 200, say 400 crores, purchases from an organization who is a micro or a small enterprise and does not pay him, so such expenses will not be allowed to it under the Income Tax Act. So this benefit has been given to the micro and small enterprise only. It is not extended to the medium enterprise. I think I'll pause here for a second and let you process this. Right? This is not given to medium enterprise. Okay, so we have all heard about MSME, micro, small, and medium. So on the medium part, this provision is not applicable. So I have given an easy flow of chart wherein I have given a flow chart, a decision making diagram. Whether the creditor is a small, micro, or small, if yes, whether the payment is mentioned in the agreement, if yes, then within 45 days such payment has to be made, or else such expenses will be disallowed. If not, the same case is for 15 days everywhere. So the main criteria here for the government is to create agreements with all the micro and small and medium enterprises, so that step 1 there's an agreement, step 2 there's a quick payments, step 3 there's an improvement in cash flow in the country, step 4 is improvement in GDP. So every time the cash flow is better, the cash flow is improved, a company may progress on its own by investing more money in the business. How to classify under the MSME? How do I know if I am a micro, if I am a small, or if I'm a medium enterprise? So this table has been made from the classification as adopted by the Udyam registration website. Udyam registration website is nothing but a portal wherein you have to get registered in order to be classified as under the MSME Act. So only if you registered under the Udyam portal and you have a certificate with a valid classification would this be applicable to you. There are a lot of benefits of getting an Udyam registration, including getting a lot of loans, including ease of business, including faster payments like the government intends to do with this budget. So you can go about the table once. I'll wait for a year for a second. So based on this classification, if you are a medium enterprise, if you are a medium enterprise year or year or year or year or year or year again, the provisions of 43BH, as we were discussing before, benefits to micro and small would not be applicable. Only to micro, small, small, and small are these provisions applicable, and not to anyone else. So medium enterprises are expected to not be enrolled here under for the income tax provisions only. MSME provisions are allowed. So these were not extended to the medium enterprise only. Maybe the next year this may also be extended to the medium enterprises if the government intends to do it. Before starting to discuss this slide, I would like to discuss about two things. One is startups, and second is IFSC. IFA is nothing but International Financial Service Centers, which would mean an established area where a lot of financial companies would come together and do business. Second is startups. If you are a startup and you're registered under DPIIT, only then would you be eligible for the benefits under the Income Tax Act extended to the startups. Right. So taxation highlights for the interim budget 2024 was nothing but certain extensions which were expiring on 31st March 24 have been extended to 31st March 25. Second is withdrawal of outstanding direct tax demand. If you have a demand of rupees 25,000 pertaining up to financial year 10-11, you do not have to pay it. The government will exempt you from paying it. Basically 25,000 तक आपका डिमांड है financial 10-11 तक का, from inception of income tax act to financial year 10-11, then the government is withdrawing that demand and will be exempted from paying such demands. And in a similar case, our amount up to 10,000 is exempt from being paying tax up to from financial year 11, that is financial year 10-11 to financial year 14-15. This is expected to benefit about 1 crore taxpayers, right? So पुराने demands वो लोग माफ कर रहे हैं and they want to move ahead. So coming to the next part is the most important part and the most famous part is personal tax में कोई changes है क्या sir? Absolutely no changes in direct taxes in the personal income tax rates. The slab rates remain the same. Corporate taxes are 22% for existing companies. under the new scheme. So when I'm talking about corporate taxes of 22%, are these actually 22% or are they something else? So under the new income tax regime for companies, the tax rate is said to be 22, but in substance it comes to 25.17 because of surcharge and cess. And 15% has been given to certain new manufacturing companies, which has its own criteria and standards. uh, so this was also given a lot of importance in the budget, in the last budget. So there will be no tax liabilities with an income up to rupees 7 lakhs under the new tax regime. So if you're in the old tax regime, this the old provision would still stand, that is up to 5 lakhs and not up to rupees 7 lakhs. This is only because of certain deductions which are available to the individuals under the old regime, that is of 80C, 80TTA, 80D, etc, etc, and 80 section pertaining to NPS. So other than that, just to bring parity to the old scheme and new scheme, having an equal amount of exemptions available to the both, this was done. Major budget allocation areas ministry wise. This is to give you an idea where the company will improve its budgeting standards and where it intends to invest, what jobs these investments would in turn create, and what other areas as an investor you may invest. First is the most famous area right at the moment is Ministry of Defense. The company intends to improve its infra, intends to improve its programs on defense, intends to improve its air force, intends to improve its navy and other artilleries. So this in turn would give rise to the defense sector directly. Indirectly, this would give rise to various areas like IT. Second would be vehicular, wherein there will be a lot of trucks, there will be a lot of other transport modes which will be sold to the government in forms of buses, which will also give rise to logistics. So one in turn the other. In directly there's defense, indirectly there is IT, there's transport and other areas which may develop in the future. Coming to the next part is Ministry of Roads and Transports and Highways. This would give rise to improvement in the logistics area, logistics industry, wherein transportation would improve. This would give rise to more enterprises which would start up its own transportation businesses. Then is the Ministry of Railways. Ministry of Railways, we all know, is progressing with more number of railways which are very important to improve transport, not just passenger transport but also commercial transports. The least importance here is given to Ministry of Agriculture and Welfare because a lot of it is already been taken care of by other industries, as well as the government also intends to understand where the Ministry of Agriculture needs to improve. Again, a least importance is also given to Ministry of Communications because which is very well evolved in today's time. So these areas just not give us an idea of how the economy will improve or how the economy will be impacted, but also will give a chance to us to understand what jobs would be created, in which areas jobs will be created. So we need to intend to understand there's a lot of job creation in defense, a lot of job creation in roads and transport in the logistics business, a lot of improvement in the railways. So this is basically a chart to understand how the GDP may improve in future. This is a small comparison of revenue receipts, capital receipts, and capital incomes and capital expenses. So every year we intend to see it's what are revenue receipts, what are revenue expenditures, what are capital receipts, and what are capital expenditure. Revenue receipts is something that we receive every year. The government receives every year. Revenue expenditure is something government intends to spend every year. Capital receipt is something that the government receives once in a while. Capital expense is something the government intends to do once in a while. So examples of capital receipts would be like sale of shares in the railway companies and the PSUs. Like it will be intent to listing the PSUs and selling a percentage of its stake. So that would be an example of capital receipts. Capital expenditure would be developing of infrastructure, not maintaining, just developing the infrastructure would be a capital expense. Revenue expenditure comprises of pensions, interest payments, and some certain areas where government has to spend every year, like collection of taxes, like collection of various other uh, areas wherein the government intends to earn its receipts, like setting up bureaucrats, setting up various offices, etc., etc. Revenue receipts is majorly income from taxes, income from interest from other countries, and other small petty incomes. So this clearly shows that every year our revenue receipts is rising, means the taxes are rising, means the company, means the country is improving. Revenue expenditure again talks about the company intends to spend a lot more. Again, coming to the capital receipts is more or less the same as compared to the estimate, and capital expenditure is of course on the rise in the case of developing economies. So I would like to thank Fintopedia for giving me this opportunity of recording these presentations and sending to you across pan India. And I thank Fintopedia, I thank the students for giving me this opportunity to come and discuss and talk to you guys. Thank you so much. With this, I'll conclude today's presentation on Budget 2024. What is important to remember is this is just an interim budget. The final budget will come up. Interim budget is just a method of maintaining the existing government subject to the new government. So post the interim budget again in June, we'll be back with the new budget, we'll be back with a new discussion. So for now, take care and thank you so much.